Welcome, everybody, and thank you for joining us this Sunday for episode 9 of the Strat Talk with your hosts, myself, Adex, and Trooper. In today's episode, we have TSDR Trading, a market analyst, coach, and chief of day trading in the Stock Talk Weekly Patreon and Discord. He's here to talk about his trading journey and how he helps new traders navigate the market. As you already know, the title of the show is called the Strat Talk, but we want to bring other traders and offer different perspectives and tools that can possibly help you succeed in your trading. This is going to be a dope discussion. TSDR, thank you so much for being here.
Pleasure's all mine, man. You got a great thing going, and I'm grateful that you reached out to me to participate. Thank you, man.
Of course. And for those of you that are new to the show, I am one of the admins of AdexTrades. I started trading before the pandemic started, and I've been utilizing the strat for 2 years. One of my goals as the leader of the group is teaching the strat to as many people as possible to help others become self-sufficient traders. I'll now take it over to Trooper so he can give a brief introduction of himself as well.
Hello, I hope you all are having an amazing weekend and ready for this week in the market. I go by Trooper, and I've been one of the leaders in AdexTrades since the beginning. I've been trading since May of 2020. I'm a student of the game, so I'm constantly educating myself. I'm really excited to learn from what TSDR has to say today.
Thank you, my guy. I appreciate it. Now, before I give it over to TSDR, I'm especially excited to have him as our special guest today. TSDR was actually one of the first people on FinTwit to welcome me into the space with open arms. And I'm talking about even before I had a following myself, like even before I even had 100 followers. This was last year back in the fall. So it's like literally, it's crazy to think that it's almost been a year now. And even before Twitter Spaces was a thing. And throughout all the back and forth that that can go on in FinTwit, I know you guys see like all the drama and other things that can happen. TSDR was one of the most solid dudes to talk to, trade with, and get advice from. And despite even our busy schedules, with our growth and things like that, we still managed to keep in touch with one another. So he is an integral part in the community. So I just wanted to say myself, like, I'm proud of you, my guy. Like, proud of your growth. Keep doing what you're doing and helping other traders succeed. And for those that haven't already yet, make sure you give this man a follow because you won't regret it. He's not only a dope trader, but he is a dope person as well. So TSDR, thank you for being here, man. I'm excited to have you as our special guest, man.
I appreciate that introduction. That was very, very kind words, and it was making me reflect a little bit. Way back when. Most people would say, man, it's look how far we come, or look how different it is now. But it's essentially the same, the same mantra, the same mandate, kind of that I have. A lot when I talk abstractly about trading, which I'm about to do, I correlate a lot of kind of these lessons and these disciplines to real life, situations, maybe specifically or somewhat loosely sometimes. But like speaking about our first interactions and some of my close relationships that I've built throughout this past year or so on Twitter and interacting with a lot of other traders is I'll give a helping hand to absolutely everyone. I've given my personal phone number out to probably 800 people that I constantly do in the Discord, through DMs on Twitter. But there's really only probably 20 or 30 people that I consistently keep in touch with, and I truly believe that it is through no fault of my own, essentially. So speaking about back before you had 100 followers, it was so easy to recognize that fire and passion, and those are the people that end up being successful. Now, I'm not saying people that are struggling right now aren't passionate or aren't hardworking and don't have that dominant Mamba mentality or work ethic or whatnot, but it's just how many punches are you willing to take and keep getting back up with that same drive and not letting it affect you on a day-to-day basis. Now, you can get frustrated, you can get emotional, but whether you take action on that is, a true reflection on your determination and characters, if you let that really affect your decision making on a day-to-day basis. Anyways, that was, kind of my initial rant that I've got. I like to go on little
Nah,
rants
man,
here and
that
there.
was perfect. Thank you. We appreciate that, man. And for the listeners who don't know who you are, can you give us a little background of yourself and maybe talk about what TSDR stands for?
Yeah. My name's Patrick. I live in Minnesota here. I'm married to Alyssa. We met working at Buffalo Wild Wings here in central Minnesota. I bartended for many years, and at a variety of restaurants and bars and whatnot. In 2017, I got the bug. My brother introduced me to Bitcoin, Litecoin, and Ethereum and whatnot. And I had a few bucks. I've always been pretty frugal and responsible with my money. My father worked in the financial industry since he was 18 years old. My brother's FA out in Washington D.C. And my other brother works on the south side as an institute at an institution. So this kind of has been innate, just like the principles of, investing, of responsible personal finance has been built into me since I can remember. But, so anyways, going back to Thanksgiving of 2017, my brother and I, came back in town for Thanksgiving. He was talking about, Bitcoin, whatever, showed me, Coinbase, showed me Binance. This was back when, on Binance, we were able to, trade, not the US version. There was just one version at the time, and you're able to trade, all these different pairings and whatnot. So, I immediately threw, a little chunk of change in there. And this was kind of right at the beginning of like that initial run up, right before it like really blew, crypto really blew up, that time in 2017. And I made a decent amount of money on mostly Litecoin, to be honest. That's one that still hasn't recovered as much, but so I made a decent amount of money doing that. Move more money over to Binance, started doing, learning, those charts, learning technical analysis at a very, very basic and very novice level. And the cryptos took a little bit of a dumper over the course of the next couple of years. And early on in that, I transitioned over to the stock market as a little bit of more of an investor. I already had like Disney stock and some Apple stock, just from growing up. My father made us start investing as soon as we got a job, and I've been working since I was 13 years old, pretty regularly. So I had a few shares of this and that, so I was aware of the stock market, and started investing in some things. And then, of course, as I'm watching that, move up and down, I begin to get more interested. Just kind of my personality, the, very attached and almost, almost like obsessive personality, to where, once I get involved and enjoy something, I have to essentially master it, or, really dive in head first, 2 feet in, whichever way you jump in the pool, and as much as possible. So, then I, eventually slowly adapted into, shorter term swing trading. And then a couple of my buddies at Buffalo Wild Wings, actually, it's crazy that restaurant produced, some pretty stellar traders. One of my good friends, Armand, he had been day trading since about 2015, pretty actively and fairly successfully. And then another guy at that, if there's any AMC people around, you might recognize Trades. He's a big YouTube personality. We also worked with him for about 2.5 years at that restaurant. And Armand and I, when we were kind of getting started, we were also kind of getting him started, in the market as well. So just a interesting upbringing. I was always surrounded with a few people with similar passions, and that's just the kind of person that I am. If you don't have similar interests and the same kind of drive and love of the game, whether it be basketball, baseball, family, work in general, or the stock market, I really kind of kick you to the curb, because I don't have time for any goofing around. But yeah, and then I ended up joining Bulls on Wall Street, which a lot of you might not be familiar with. Some of you might be. and started learning really in depth and very quickly how to actually navigate these markets on a short term basis. I'm an intraday trader. I scalp 5 minute candles back and forth using mainly patterns, bear flags, opening range breakouts, and I've got a variety of setups that incorporate the volume weighted average price, and moving averages and whatnot. But Canal Desai and Bulls on Wall Street really took me from hey, this is a hobby to this is going to be my career, and this is my future. This is what I want to do for the rest of my life. And he provided essentially the tools. Again, going back to that initial part that we were talking about earlier. I've talked to 800 people or so, given my personal phone number to, and just like he's had tens of thousands of people come through his boot camps and come through his chat room. Only a few end up really coming out ahead, and it really comes down to how willing you are to dedicate yourself to this. And I like to think that I am one of those people. So that's essentially my upbringing, and here I am today. About 3.5 years later from starting in Bulls on Wall Street to, having, being the main contributor in, a Discord, that I think is pretty successful, and helping people on a day-to-day basis, spending, 14, 16 hours a day answering questions, talking to people on the phone every single day after the market closes. I probably talk to 3 or 4 people for, 20, 30 minutes straight. How was your day? Give me a good trade, give me a bad trade. Tell me what your mindset was, what your emotional stance was coming into the market, what your bias was. Did you have a fight with your wife? Were your kids annoying you? Blah 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 blah. Give me the background, the foundation coming into the day to kind of give me some insight into your decision making. Blah 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 blah. Anyways, long story short, yeah, I like trading stocks.
That's beautiful, man. That's beautiful. Who would have thought that a Buffalo Wild Wings in Minnesota could have produced all these traders? That's so crazy, man. That's a
That's what
wonderful.
I'm saying.
That's
It's
a
wild.
great story. Great story.
Uh,
Did you have a follow up?
No, man. No, I'm just kind of reminiscing on those days. How young and almost naive, at times. There's just that foolish love of a young boy in the stock market. It's crazy how far we come.
You. Now, I see that you're a chief of day trading in Stock Talk Weekly's Discord. Are you primarily just a day trader now, or do you still swing?
I'll swing, relatively rarely every now and then. Not so much really over the past uh, year, really. Every very, like I said, very rarely. I started out swing trading, and I was pretty decent at it. This was, in early 2019. The market was going just straight up, though. So reflecting and looking back at the market now, is my swing trading skill as good as I thought it was back then? Maybe not. Um, but really the setups that I use, the technical setups that I use are really transferable to any time frame. But I'm very aware of my personality and what kind of factors into my decision making. And this is something that I initially to encourage people to do is take a really deep and honest and open and revealing personal inventory of your characteristics, of your personality, what really drives you nuts, what really excites you, and how you really make decisions when you're frustrated, when you're excited. And based on all the time and hours that I've spent really reviewing my decision making and internalizing my characteristics and personality, it's just not as fit for swing trading. Kind of that really short term mindset of quick reward, and a little bit naive of the bigger picture sometimes. That's a characteristic of me, not just in trading, but definitely in trading that has really made me aware of that. So I do try to avoid swing trading, a couple weeks out or so. I do overnight some trades, often just partials from earlier day trades that I think have the chance for day 2 or day 3 continuation. But very rarely do I maybe once or twice a month or so, I'll get in a trade where I'm looking weeks out at this potential move. But yeah.
I like how you mentioned that you understand what your mindset is and understanding that your mentality, that you only have this short-term mindset. So that's why you primarily day trade. And I think that like some traders, they try to force like things, like they try to either force a day trade or if they try to force a swing trade, knowing that they can't hold things for more than 2 days or 3 days or things like that. So understanding like and playing to your strengths, I think that's very important in this market. So that's good that you do that, and it's good that like you just try to focus on that.
I mean, just think about it like, if you're, let's just say you're on a date and you're asking, like like a first date or whatever, and you're asking, oh, what are you into, and and they say, well, I'm really into basketball or whatever. Let's just say they're really into basketball. You're like, oh yeah, me too. I'm a huge basketball fan my whole life, and and it's actually a lie, right? And eventually it's going to come out. If you say, let's say your relationship furthers, eventually it's going to come out. Hey, let's watch basketball game. You ever heard of Kevin Durant? Yeah, I've heard of Kevin Durant. He's like the greatest Pistons player ever. Just something stupid like that, right? It's eventually going to come out. Obviously, I'm a big basketball fan. I know Kevin Durant doesn't play for the Pistons. I'm saying what someone who's kind of faking it would say. And it's the same thing in the market, except for the market's going to do it quicker and harsher. So you better be honest with yourself and know yourself, and be prepared for that humbling, because it will do it very, very quickly. So be ready for it and be prepared.
Man, I'm still stuck on the fact that you worked in a restaurant and you were responsible with your money, because the culture there, man, you get it and you just spend it. So yeah, respect to that.
A little bit. I might have withheld a little bit.
Yeah.
But I like to for the for the most part. I like to think that I was slightly responsible, but all every now and then you gotta you gotta party a little bit.
Yourself.
Yeah.
Do you have any intraday rules that you stick to that helps you like manage risk?
Oh, yes, I do. First off, one thing that really ends up cutting some losers, and that may potentially get out of hand. Um, I'm going to go two ways with this. One is if the setup is invalidated, you have to stop out. So let's say I'm getting in on a rejection of the 20 EMA on a bear flag continuation of the 20 EMA, right? Even if say we go sideways, and even if you're up a little bit on the contract, let's say you're trading something a week out, or even it's a Monday, you're trading something that expires Friday, and we haven't moved much, but the 20 EMA has moved slightly lower, and now we're above the 20 EMA, kind of making our way sideways, possible basing to push up into the VWAP, let's say. Your setup's invalidated. So even if you were risking 40, 45 cents per share on it, or 8 to 12% on the options contract position, your setup is invalidated, even if you're down 3 or 5%. So you need to stop out. That's one thing that I'm really religious about. Another thing is I almost to a fault sometimes that I cut losers very, very quickly, because I'm aware of my win rate. I win less than 50% of my trades. It's slightly moving up. I'm actually at 48% of my trades, where earlier in the year I was at about 42% success win rate on my trades. So I'm very aware that I lose half my trades. So if it doesn't begin working for me immediately, I'll stop out very quickly. 4 losers that I took last week were under 5% losers on options contracts, and so that tells a lot about how quick I truly am to to kill a trade that I don't think is working right away. Some of it is a little bit of instinct, and obviously sometimes I cut a potential winning trade that might be slightly losing at the time a little bit too quick, but that's just the name of the game. But I really encourage people to manage risk, and by doing that, I cut losers very, very quickly. I don't try to think that a losing trade is going to turn red at any point. Chances are, here's why. Even if it does end up moving, green, right? And let's say you're down, 10, 12, 15%. You obviously got a bad entry, right? You didn't get an ideal entry, and in order to really trade from a position of strength, you need those pristine entries, because otherwise, all those characteristic flaws that you've identified about yourself are going to begin to come out. You're going to begin to get more stressed and maybe more frustrated as you see something going from 8% loss, 10% loss, 12% loss, 15, 20% loss, and then you're going to begin to make irrational decisions. And a way to kind of cure that, irrational decision making that I know that I make when I'm, struggling, or when I've got a losing trade. A way to cure that is to, for me, is really focus on picture perfect, pristine entries. Because if you get that, really solid entry right as we're rejecting at the 20 EMA, right as we're bouncing off the VWAP, right, you're going to be trading from a position of strength, and it's very black and white. Either the setup is valid and it is working, or the setup is invalid and you need to cut it. And it's as plain as that. It's as simple as that.
It sounds like you respect your stop loss, man. It's really good. If you didn't respect your stop loss last week, you got wrecked. So, I mean, although you say you have like a 50% win rate, that's really good that you keep your losses that small. And I think listeners should really focus on that.
Yeah, like I said, even at times, almost to a fault sometimes. Obviously, in the long run, it does benefit me, but there's definitely more than a handful of trades to where, I didn't let work as much as I probably should have, in review. So yeah, TSDR stands for Tell, Show, Do, Review. I wanted my Twitter name to be something, about, really in-depth analysis of, like I said, yourself, of your trading. And reviewing, I think, is the most crucial part to your trading. Reviewing your trades, journaling your trades. And I don't just mean, going into an Excel spreadsheet and typing in, here's how much I was risking, here's how much I ended up losing, here's how much I was, ended up winning on XYZ trade. That's not journaling or logging your trades. That's just being aware of the math and statistics of your trading. Journaling your trades is really, like journaling. Imagine if you were journaling like your life, or journaling about your relationship. You wouldn't just say, I won, this fight with my wife or whatever, and I'm 2-0 against her this week, or crap like that. Or I made dinner and I bought her flowers and this and that, and she did this, and she did these three things. So I need to do one thing to make up for it. It's not like that. It's not like a back and forth statistical thing like that. Although trading has an aspect of that. It's really an in depth. Here's what I was thinking. Here's my thesis. And then you begin to get into, the actual setups, and the specific reasoning behind the trade. I actually typed something out that I want to read about journaling your trades. And I thought it was really good. So it's all about before, during, and after. But before the trade, you ask yourself, what is the setup? Here are your thoughts, your thesis going into the trade, such as the reason for taking the trade, your supporting argument, and then of course reasons why it may not work. And then you dive into, what is my risk, what is my possible / likely reward during the trade. Then you analyze. This is in reviewing your trades. Then you analyze each trade at entry and at each scale. Identify areas of success and where you could have and should have done better. Hindsight obviously plays a significant role in this, and it's easier to see, but don't be soft on yourself. Judge yourself harshly and demand the highest level of quality, down to the penny, on your entries and exits. My exits are more risk / reward factor related most of the time. Selling at 2-to-1 risk, 3-to-1 risk, etc. I want to be out, most of my position at that, 2 to 3-to-1 risk to reward level. Then after all that, you can begin to look at the math and percentages and win rates and risk reward factor, and make adjustments to your overall and general strategies, because to get the statistics on your side. And by that I mean, say you're taking profit on every trade at, you're taking half off at 10% and selling the rest break even. And then on every losing trade, you stop out at 10%. All right. The math of that is you take 5 trades, or let's just say you take one trade right now, you sell half at 10%, you stop out the rest, break even. You made what, 5% overall on the trade. Now, next trade you take, you lose 10%. So you need to be trading at a 67% win rate in order to break even. That means all your profits are over all your profits begin to come over 67% win rate. So that means if you're at 75%, then you just do the math of your position sizing, and you can calculate, okay, here's my profit factor over 67% win rate. Every 2/3, I need to win every 2 out of 3 trades. So, anyways, I'm big on the math of the trade. I'm big on the in-depth, deep personal inventory of your personality and of your trading and your decision making.
I love it, man. That's great. That's great. I have a question for you, kind of like a two-part question in regards to like stop losses. And because in particularly, I would say that I have sort of a loose stop loss and I would say, a mental stop loss. And the reason why is because of I trade primarily options. And I know that because due to like the Greeks and due to theta, oftentimes we can see like the percentage of our contract go down or be negative, but we can look at the underlying price of the stock and we see that it's either the same price or it hasn't really hit our technical stop loss on the chart. So so I guess the question is like, how would you deal with that if, let's say, your stop loss, you see that is down 10%, but you're looking at the chart and clearly it hasn't reversed on you? How do you handle that?
Yeah, so I think you and I differ on this, slightly, and neither of us is right, neither of us is wrong. I believe. I think it's just a preference of strategy and style. But I would much rather stop out. I don't, when I enter a trade, I don't immediately put a stop loss. So if I'm entering a contract at $1.75 and my stop is at $1.65, let's say, or $1.60, give it 15 cents, $15 per contract. If you're willing to risk $150, you can take 10 contracts, $15 loss. That'd be $150. If your stop loss is at $1.50 and your loss is your personal risk amount is $150 per trade, and your stop loss is 25 cents per contract, obviously then you can take 6 contracts, right, instead of 10. Anyways, that's a little bit about position sizing, but I do a little bit of a balance between the two. In review, you do want to let the trade work and let the chart stop you out, but I do believe that there's a slight balance between the two. For example, I believe in a time stop. I trade, like I said, I trade very, very short term. I'm often out of trades, completely within 10, 15 minutes. Very rarely do I sit in a position for the whole day. My longest trades are often, a couple hours. But if I'm one thing about, hold on, let me think about how I want to phrase this. My losers last an average of like 2.5 minutes, and my winners last about an average of about 28 minutes. So I really don't give it time to, and this goes back to kind of my overall general picture of it, is I'd much rather be looking at it with a naked eye and re-enter. And re-enter again. So I do think there is a fine balance between letting the chart stop you out and giving it a fresh look with a naked eye with no position. And not necessarily specific percentages. I think it's dumb to have, I stop out at 20% every time, and I take profits at 30 and 40% every time. I don't really like that strategy, because it really doesn't make sense for every trade. Because for every entry, there's a different place you should stop out on the chart, and based on position sizing, you need to be working that accordingly. Some of my trades I do give 30, 35%, because on the chart, this trade is valid until we break above the 9 EMA or break above the 20 EMA or break above the VWAP or break above the most, the most recent 5-minute candle. And in order to be in that trade, you need to, let the, have that stop loss there. And that comes down to position sizing. There's some trades where I really only give, I'll be entering at $6 a contract and I'll only give it to $5.70. That allows me to, really end up taking some size if I'm willing to risk, $600 per trade on that. And I'm only risking $30 per contract. I can take 20 of those contracts times $6 per contract. You're looking at, putting up $12,000, but you're not putting up $12,000 of capital. You're really only putting up, $600. Obviously, when it comes to options and slippage, I factor in, like I said, a little bit of that speed and quickness and the spread between the bid and the ask, and I factor that into my position sizing significantly versus trading just, equity and shares where I'll really do, down to the penny math and position size perfectly accordingly. But in options, I do, downsize position sizing, but so, specifically answer your question, I think there's a fine balance between the two. When I know my discipline, and I don't encourage newer traders who might be struggling with discipline to have mental stop losses when you're entering a trade, because it allows you to bargain with yourself and allows you to negotiate with that stop loss. Well, sure, we broke above the 9 EMA, and I said I was going to stop out at the 9 EMA, but it really does have room to the 20 EMA. All right, well, then you give it room to the 20 EMA. Well, we really got room, to the VWAP and, to this previous, range where we broke out from. And then all of a sudden you're fucking bagged. Just like that in 10, 15 minutes. It can be very, very quickly. And then you don't know what to do. You're kind of struggling. You're sitting there, underwater, struggling for air. You don't know how to swim, right? And when you allow yourself to be bargained with, you allow yourself to become a loser. And, but like I said, I'm aware of my discipline. I'm aware that I'm really good at stopping out, like I said, almost to a fault sometimes. And so I allow myself to, as we approach that, stop price, that's when I put in a hard order. But, not initially.
See, and this is why I love that we're having this discussion. And this is why I love talking to different traders, because there's no right answer when it comes to like how we trade or how another person trades. TSDR and I, we have different ways of stopping out. Like more times than not, I'm allowing the chart to stop me out, but he says he uses more of a percent or like a tech. He knows when he's going to be getting out of the chart. And what I love about that is because I also have a friend as well who he uses a hard stop loss, and he uses a hard stop loss of 10%. And I would always make fun of him, and I'd be like, dude, why are you using a hard stop loss of 10%? You're going to get stopped out like immediately as you enter the trade. And he said, I don't care. And I said, why not? And he said, I've never taken a loss more than 10%. And I was like, what? And he said, all my L's have never been more than 10%. And my winners have been more than whatever percentage. And I'm like, huh, that's interesting. And he says, yeah. So like my risk management is that I won't take less than 10%. I can live with that because I don't want to live with more than a 20% loss, more than 30% loss. But if I'm okay with getting in a play and it immediately running, and that could run for 30, 40, 50%, at least I know that my winners run and my losers are never more than 10%. And I was like, wow, that's an interesting approach. And so that's why like I love hearing other traders when they have like what their approaches to how they do their stop losses, because there's not one right answer. And like getting different elements and maybe utilizing different like techniques from other traders, you can see which one works best for you and see which ones like will help you become successful. So thanks, man. Like I appreciate it. Thanks for that.
I tweeted, I do these kind of sarcastic threads every now and then. And where they're really just like kind of short punchlines. And I tweeted out a thread, with the thread emoji, whatever, on a tweet. And I said, thread on why my trading strategy is the best and whatever, put a bunch of emojis on there, the alarm alert thing, whatever. And in the next tweet, I just, I always have a short punchline. And I said, because it works for me. And and it's really as simple as that. There's so much of a variety of strategies, and I'm not saying if you're struggling out there, struggling to trade, sure, this market is difficult right now, but it also provides significant opportunity. I mean, look at the range where we have on a daily and weekly basis. It's incredible, and we are really blessed to be participating in the market at this time because I believe it's truly historical. But um, you have to, like I said, go taking that deep personal and honest inventory. Are you being stubborn about your strategy that really doesn't actually work for you, or do you have a strategy that is working for you? You just need to tweak it and manage it and make slightly better decision makings in order to take yourself to the next level. Maybe bring in a little bit more structure, system and discipline to kind of take yourself to being maybe slightly unprofitable or break even to being profitable and then beginning to excel to that next level. So yeah.
That's great, man. That's great. And I'm so sorry, but I do have a follow up to that previous question that I do ask. So because you are a positional trader and you do rely on indicators such as VWAP, the EMAs, and things like that, let's say you are taking a SPY day trade, zero DTE day trade, and let's say price crosses over the 9 and the 21 EMA, the 9 crosses over the 21 EMA, and your target is like potentially to go back into VWAP. So let's say you take that like the call in the 921 crossover, but let's say be due to theta, and because price is like taking too long, but it's still approaching VWAP, like it's going towards VWAP, but because of theta, your premium is losing in price. So let's say like now, like so although price is above the 9 and it's going towards VWAP, but now you're down 10% because of theta and it's taking too long on that 0 DTE. What would you do? Would you be getting out, or would you still be staying in that play because it's still going towards VWAP?
And that's a little bit where that balance comes into play. If my stop loss was, like I said, when I get in the trade, I'm really hoping that not hoping isn't necessarily the best word, but I'm going to use it here. I'm hoping that I have the best entry. I'm confident that I have the best entry here. So I really rely on and look for really significant velocity in my trades. Like I said, my losers are about 2.5 minutes, 2.5 minutes long. So if I don't get that immediate velocity, I generally stop out. So if I'm in that trade and it's taking long enough, and the chart is working in the direction that I expect it to, but I'm not getting that velocity that I'm really looking for and that I rely on as an intraday trader, I would be more inclined to stop out, because this goes into something else that I talk about is risk reward. Like I said, when you're journaling your trades and logging your trades, it's not like specifically just that Excel spreadsheet of the losers here, the statistics. It's because risk reward is fluid when entering a trade. Okay, you expect it to approach VWAP. Now, sure, you're down, and it took a little longer than you expect, and you're down 10% because of theta. Now, what happens when we do actually approach the VWAP and your target is reached and the trade is successfully on the chart, but not in price on the options, right? What are you going to do? Are you going to stop out, at 10% loss and call it a win, because it's actually a loss? So that is where the balance comes in, in cutting a trade, that isn't working because of theta, but is on the chart. So I'd probably be more inclined to stop out and around that 10% level than let the trade work out on the chart in that case.
Great, man. That's great.
I noticed you're mentioning the 9 and 20 EMAs and VWAP. Can you give the listeners a little description of how you use them and on what time frames to help navigate your trading?
Hell yeah. Absolutely. So 9 EMA to 20 EMA, you can use 8 EMA, 21 EMA, blah, blah, blah. It's all the same crap. There's no reason that I use the 9 and the 20 other than that's what, the people who went before me, my mentors that I, worked with, that's what they used, and it worked for them. So that's what I use. I know plenty of successful traders who use like a 5 EMA and a 10, a 5 MA and a 10 MA, a whole variety of things. I've just found that the 9 and the 20 work for me. This kind of dives into some of my technical setups that I use. I posted on my YouTube channel 2 trade reviews that I took this week that really are my bread and butter type trades. Specifically, I want to talk about one on Friday. If you pull up the SPY chart on Friday, I took this trade on SPX. And I do a really in-depth review, like I said, on my YouTube channel, to most recent video of the 39.80 puts that I bought on Friday with a really solid entry. I entered at 11:15 and 20 seconds. If you go look at the chart, the 5-minute intraday chart, I don't use pre-market or post-market data on any of my charts because I think it messes with the moving averages and it just kind of blurs it up because there's no liquidity in pre-market, so I don't give a crap about the pre-market. Anyways, that's one of my other rants that I kind of do. But So what we're looking at here on SPY on the 5-minute chart of Friday around that 11:15 time, right? We get a failed breakout to the upside on the 5-minute chart at the 10:55 candle. We try to push that red to green spot. We try to push over yesterday's close up above 399, kind of make a little bit of a rounding base attempt to maybe try to test that 400 intraday high that we hit early in the morning. It kind of starts to look like that, and all of a sudden, we just get smacked, and now we're looking at a bear flag, right? This is a failed breakout into a bear flag. And I've noted multiple times over the past couple months that a lot of these big trends, a lot of these breakdowns intraday have not started with like an opening range breakdown, with a downside setup. A lot of these real strong trends have started at failed breakouts and led to strong downtrends, or vice versa. A lot of the strong uptrends and velocity moves to the upside that we've seen have started with failed breakdowns and then led to strong uptrends. So anyways, I was aware of that while watching this trade happen. And then we got that first initial break of this lower trend line on the 5-minute chart, going from about 10 a.m. up again to that 11 a.m. spot. And I let that one move. Because I don't see a solid risk reward entry as soon as we break that bear flag, right? And we enter, I'm sitting at about 398.35, give or take. And, to really let this trade work, I'd have to risk that to that previous high of about 399. 399.25, give or take. So, I wasn't, that risk reward there wasn't attractive, giving SPY $1 risk, because then, I really have to get $2, $3, $4 move out of it. Sure, we ended up getting that, but in how long, right? And you're working on Friday with 0DT contracts that I use. Anyways, so I let the first move happen, knowing that at some point I'm going to get a retracement into these moving averages. And we get 15, 20 minutes later, not even, we get the 9 EMA crossing over the 20, very bearish, bearish intraday sign that I like to look for. And right there at 11:15 and 11:20, right as those indicators are crossing over and we begin to really be in a strong bearish position, price is below the 9 EMA, the 9 EMA is below the 20, and we're below the volume weighted average price and yesterday's close. So we've got those 5 levels of confluence going with our direction to the downside, right? And yeah, and we reverse right at that 20 EMA. I get an entry right at 11:15 and 20 seconds. Literally, picture perfect. I couldn't have really wrote it any better. Obviously, a little bit of luck plays into it. It's not all just quality decision making. That obviously plays a little bit of a role. But I'm not to deny a little bit of instinct and a little bit of luck plays a role in trade in this decision. And if you go look at the 2-minute chart, again, it shows it a little bit more clear, the bear flag. I break this down in the video, the 2-minute chart, because we really pop into that 20 EMA on the 2-minute chart perfectly, and wick up and start to reject at 11:16. So that's essentially a trade that I use every single day. We get a move down, and then we begin to develop a bear flag right into that 9 EMA, 20 EMA, and we get a move to the downside. So after you get that rejection at the 9 and 20 EMA as they're crossing over in that bear flag setup, then after that move occurs, that a first initial move, it could be anywhere from $5 to $10 to $2. You have no idea, but based on the risk, you can let yourself take that trade for X amount of time. And then what you want to look for a strong continuation is for that first test of the 9 EMA to hold with the trend. And on that 12:05 candle, we get a nice solid rejection. We wicked up a little bit over the 9 EMA, and then we quickly began to reject and ended up making lower lows. Shortly after that, we got a push into the 20 EMA and then started a new trend. But anyways, on this 5-minute candle, actually at 12:05, I ended up getting wicked out. I had too tight of a trailing stop on the last fourth of my position. Ended up getting wicked out slightly, so that was a little bit of a bummer. But it is what it is. I was actually able to get a re-entry at about 1 o'clock as soon as we broke another trend line on the 2-minute chart and 5-minute chart, right at the 9 EMA at 1 o'clock. I think the most important lesson of what I said is you really want to look for that layer, right? So you've got 5 things that you look for, and trend that I look for is that price below 9 EMA, 9 EMA below 20 EMA, 20 EMA below VWAP, VWAP below yesterday's close. So those things intraday are.
Wait, can you repeat that, please?
Yeah.
You're taking notes, and you said that way too fast, man.
I know. I talk really, really fast sometimes. It's sorry. So I like price below the 9 EMA. I like the 9 EMA below the 20. I like the 20 EMA below the VWAP, and the VWAP below yesterday's close. So in that time, that means we're in a red day. We've got the bears in control underneath the VWAP for the day. We've got the 20 EMA, the intermediate intraday moving average, above, lagging above price. We've got the 9 EMA, the short term intraday moving average, above price, and price is below all that stuff, showing bulls in bears in maximum amount of control, and indicating that we have potential for strong trend. And that goes into some, like I said, my decision making about position sizing, about how much room and risk I'm willing to give the trade. If maybe we've got 3 or 4 of these factors going in my direction. Let's say all these things are happening, but we're just coming out of a reversal of a strong intraday move. Maybe we gapped up, had a nice push in the morning, and price is breaking below the 9 EMA, breaking below the 20 EMA, but we still got that VWAP level at support, and we still have yesterday's close, the red to green to red spot. So we've only got 3 levels essentially of confirmation going with our trend, with the direction we're looking to trade, and as those things begin to drift in your direction, the stronger, more indicative is the higher probability that the trade's going to work out. I'll still fucking take a trade if we're above VWAP and above yesterday's close, and with only a couple of these going in my direction. But I'm well aware that the probability of the trade working out, significantly is less. Maybe the chance of it working out are 30% or 20% or 40%. But I'm well aware that the probability is less than when I'm taking this 20 EMA breakdown or this 9 EMA continuation at 1 o'clock. I'm well aware that the probability of this trade continuing to trend lower is significantly higher. I'm trading with the general direction of the market that day versus trying to fight it and trying to fight reversals. I think people who pick bottoms are idiots and they're going to lose all their money. I think people who pick tops are idiots and they're going to lose all their money in the long run, because it's stupid. Why try to fight the trend when you can just go with it? It's so much easier. Anyways, that's what I got.
Dude, I'm loving all of this, my guy. I'm looking at the
Amazing.
SPX chart as well, and I'm just like, dude, this is beautiful. Like he's saying everything that's supposed to happen. Like, and you know what's crazy about so I know a lot of stratters like in relation to the strat. I know a lot of stratters don't particularly like using EMAs because of the fact that oftentimes the strat entry will probably get us into the trade a little bit quicker before that crossover occurs. However, me in particularly, I like to use the EMAs intraday because I've noticed that the EMAs can oftentimes allow you to stay in the trade longer than you initially think you can stay in it, right? We know that the TTO phenomenon, the triangle day out, like occurs, right? And I like to use the 21 and the 9 EMA as well, because if you look at SPX and if you look at the 5-minute, you see that you see that 921 EMA crossover to the downside, and we're literally riding the 21 EMA the entire time before we finally cross at, like, what time is this? At 15, was it 15:05? So like it's a beautiful thing to have on your chart if you want to stay in the trade as long as possible, and if you want to continue with the trend. Yes, you can use that crossover as well, because he said everything was correct. Like, you're below VWAP, you have that 921 EMA crossover at, what is this? 11 10, and that was your entry, then you just run it, and then next thing you know, there's your 300% SPX play for the day. So it was a beautiful, beautiful play, man. That's a beautiful play. And also, like, I'm looking at on the 15 minute, you had that 122 ref strat to the downside on the 15, right below VWAP, and then that you could have just rid it the whole entire trend. So it was a beautiful play for those of you that got an SPX puts to the downside.
Yeah, and like so what is the strat setup again on the 15 minutes?
So if you look at the 15-minute time frame, at you had the inside bar at 10:30, and
Yep.
then after that you had the 2 up candle at 10:45, and then you had your 2 down candle at 11 o'clock. So that would be your 122 rev strat to the downside, and then you could have just taken that to the down the whole day.
Exactly. So like essentially, we're all trading the same thing.
The same thing. Yep.
Yeah, it's it's just what you want, what you kind of use as the guide to make these trades. But in reality, price action is telling you all these things. It's telling this the same story. It's just whether the fact does your system allow you to listen, and does your personality and characteristics allow you to hear what is being told, what the price action is telling you, and make those quick calculations and quick decisions. And that's really what trading is, because most people that struggle don't have that ability to make quick and calculated decisions, and you really have to be able to do that. And it comes down to taking that deep personal inventory of fight or flight. Which one are you? In the heat of the moment, which one are you? Because if you're aware of that about yourself, you can identify, like, if your instant instinct is to fight, you're probably really good at making quick quick decisions. Also, you probably have a little bit of irrational decision making at times, something to be aware of. Anyways,
Yeah.
yeah.
Show, do, review. You're giving a class today, man. I love it.
Yeah, and like I said, I mean, and I got kids. I got a 4-year-old, 2-year-old, and 6-month-old. And it's actually, I read it in a kid's book. Is when you're teaching kids to brush your teeth, and even my father, in his career in finance and management, it's very, very simple. You tell someone how to do something, right? That's the kind of the instruction, right? The specific direction. Then you kind of show them how to do it. A little bit of example, and then you say, all right, now do it. Show me what you got. Go take some trades on you. Go create a watch list. Go wait for these intraday setups that we talked about and that I showed you, and then come back with your execution, with your entries and exits, and we'll review them together, and maybe and discuss how you could have gotten better entries, better exits, blah 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 blah. That's what I wanted. That's what I wanted this to be all about, because that's the way I learned. That's the way I teach my kids how to do very simple things like brushing your teeth, going to the bathroom, whatnot. That's the way people in Fortune 500 management companies manage their employees. It's very simple. It's very, very simple.
What are some major guidelines that you tell, like, your newer traders to follow?
What do you like? What do you mean?
Like rules, discipline, maybe technical analysis. What are some of your, like, go-to things for, like, when a new trader asks you, like, hey, like, I need some help, I don't know where to start?
Yeah, I just looked up on my wall. What's this? Ask yourself 2 things very, very simply before taking a trade, and if you can easily answer them and explain them back to me, or back to a someone who has a very novice level of charting, trading, technical analysis, then you should take the trade. And the question is, what is the setup? What is my risk? Those 2 things. If you can identify what the setup is and explain it to someone, and kind of justify it, then it's valid. And then ask yourself, what is your risk? Because the question, what is your risk, it seems very, very simple, but it is a very loaded question. What is my risk? Now, how much am I willing to lose on this trade? How large is my account balance? and what dollar amount, what percentage of my account am I willing to lose per trade? How many losing trades in a row am I willing to take on any given day or any given week, and to have a drawdown? So, I generally risk between 0.25 and 0.5% of my account on any given day. Really, around 0.25% of my account on any given trade. I'm sorry. And if I lose 3 or 4 trades in a row, I'm pretty much out. So my max drawdown is about 1% to 1.5% on any given day. And I'm well aware of that. Sure, I'm not picture perfect. I lose 2%, 3% of my trades sometimes. Do I get aggressive and overtrade and make stupid decisions every single fucking day, man? every Well, not every single day, but every week, every month I do. I'm human, and but what is your risk? It's a little bit of a loaded question. It gets into position sizing and a little bit of technical analysis. But if you can ask yourself, what is the setup, and give yourself a clean, precise, quick answer, and explain it and justify it, you're good. And what is the risk? That's strategy and discipline you need to be aware of.
You're speaking facts, my guy. You're speaking facts. And what's crazy is that we had like a bunch of questions that we had for you, and we didn't even get through a third of them in this hour. So we appreciate like all the game that you're spitting, man. Like, thank you. And I know on behalf of the audience members that are here, like, we appreciate the advice that you're giving us. If you don't mind, if you do have time, are you okay with some of the audience members if they want to request to ask you a couple of questions in the meantime?
I got plenty of time. I'm down here for the next 5 hours looking at
Perfect.
charts.
Perfect. So in the meantime, audience members, if you do have a question to ask TSDR, please request to speak and we will bring you on board. And while we wait for the audience members to come on, I have a question for you, TSDR. Have you heard of this strat? I'm pretty sure you have. And if so, have you utilized it? And what are your favorite parts about it?
Yeah, yes, yeah. To answer both the questions, yeah, yes. I think to be a well-rounded trader, you should be aware of aware of a variety of strategies. I think that is crucial, because you want to know. Technical analysis is all just a very complicated way of looking at people's decision making, and if you can have as many be aware of as many factors as possible in people's decision making, it allows you to have a bigger edge in the market. So if I'm aware of what a significant amount of people are using as strategy, I can begin to determine where a trade's going to go. Like you just said, if I'm looking and I'm constantly flipping through time frames, the 2-minute, 5-minute, 15-minute, hourly, daily, weekly, etc. Throughout the entire day, like a maniac. I've got the software TC2000 to where I can just simply click the control 1, 2, 3, 4, 5, 6, 7, 8, 9 and flip through many different time frame, and I can look at 10 different time frames in the course of 30 seconds. You have to be aware of strategies that other traders are using, because it gives you a bigger edge in the market. So yeah, I'm aware of this strat, and as I think everyone should be.
Beautiful, man. Thanks. Beautiful. Alex Strat, we have you as a speaker. Feel free to ask a question for TSDR.
Hey, I'm Alex Strat. For those who don't know me, I am a proud member or team member here at the AdexTrades server. First and foremost, thank you, TSDR. With everything you said about your background, where you came from, the people you were around is very, very inspiring. I'm hoping that an audience member here can relate and become inspired. Thank you for being unapologetic about it. There's somebody out there waiting to hear your story and take some action. And my hope with this Strat Talk series is that one of our audience members, at least one of them, can take action based on hearing your story. Now, my question is to newcomers or to new students: what's your advice on honing the skill before getting skin in the game? A dear friend of mine, an audience member right now, a mentor as well, Master Wu Jr., preaches perfecting the craft through paper, and I couldn't agree more myself. I always tell people the market can take your bread, but never your ability to make it back. So what's your take on that? Do you recommend the paper trading to perfect the skill or not?
Um, First I'll preface this by saying I'm very blunt. That's in my deep and open and honest personal inventories. To a fault, I'm very blunt. I think paper trading is a garbage and a terrible way to learn how to trade. I'm sorry, Alex, for responding that way, but like I am brutally honest. Trading is so mental, emotional, and psychological that you don't get that experience in paper trading. Now, to preface this, I don't think anyone should go from knowing jack shit about the market, pardon my language, I apologize, but to knowing nothing about the market to putting money into the market. I think they need a decent foundation of knowledge first. And you do that by watching, by learning, by watching videos, by learning very novice levels of technical analysis or fundamental analysis, whatever forte or whatever road you want to ride down first. But then I do encourage people to start with a little bit of money, because you're going to learn so many things about yourself and your decision making along the way that you're not going to learn with paper trading. Because a 20% loss in paper trading means absolutely nothing. In fact, I think it encourages poor behavior, because you might get used to seeing that 20% loss or 30% loss or 50% loss. And you might think it's okay because on paper you've seen something come back. Maybe you're in a BABA put and it went negative 40% and then it came back and went 500%, right? You're going to have that memory on a paper trading, and it's going to haunt you forever. And I truly mean haunt you forever. When you get into trading with real money, it's so much different. And whether it's a dollar or $500 or $5,000 or $50,000. One thing my father always says is a dollar is a dollar is a dollar. And that's why I hate lotto trades. I hate people risking profits on any given week. I see you, Jake. Shout out, Jake. What up, baby? Because a dollar is a dollar is a dollar. Whether you made it, whether it's profits for the day, profits for the week, profits for the month, or for the year, each dollar is the same. You fucking earned that dollar. Why would you risk it on a trade that you think is C plus? Why would you risk it on a trade that you think may work or may not work? You should, every single trade you take, you should have some level of probability that it should work, because a dollar is a dollar is a dollar. And then my dad goes into the example of the turkey timer, which is a different example. That's a lot of a little is a lot. This is about small compounding games. Dude sold turkey timers for 2 cents, but he sold like 5 million of them every year for the past like fucking 100 years. And that's a different thing about compounding small gains. But we'll get into that later.
Yeah, well, thanks for being, like I said, being unapologetic about your processes. And now let me ask, let's say you want to conduct like a study, right? And you're like, okay, well, I'm trying to integrate this new element, perhaps into my methodology. And do you do that would you encourage people to do that with the real money, since you don't quite yet know the probability of success of the win rate of this integration of this new element to your methodology?
Well, I would say so. The last part you said, if you don't quite know, the win rate of this methodology, and I would say you have a minimal understanding of what you're trying to make work. So I would encourage that person to go essentially back to the drawing board and determine, is this a strategy that has the potential to work, for someone, because I would only recommend trying out strategies that are tried and true and proven, and by that I mean either someone you respect, a mentor has proven them to be true, or whether you've seen and you've learned that these strategies work. So a simple back test of this would work. I've tried many different strategies that around swing trading. Let's say back in the day that I thought would that I thought, hey, this is a decent strategy that I've seen other people kind of talk about and discuss. I went back for weeks and months and looked at them on the chart, and I was like, hey, this doesn't really work. And at least for me, I couldn't see it. It was a strategy about using the 20 moving average daily and the 200 moving average, and as they converge, as they come close together, you want to buy them as price is breaking above the 20-day moving average and the 20 days above the 200-day, and you expect them to expand and contrast, and you want to buy them as they contrast, and price is above the 20, 20 is above the 200. And I went back and looked at this and back tested this for probably about 6 weeks, and I just didn't see it working out in a significant basis. I didn't have a software that calculated this, but I would have guessed the win rate was maybe 30 to 35%, and the risk reward factor was minimal. So someone who's trying out a new strategy, I would encourage them to really have an in-depth thesis and understanding about the strategy before implementing it with real money. And that goes into my answer about the paper trading, is because you really shouldn't be stepping into this game without a decent understanding of what you're trying to accomplish. And once do have a decent understanding of what you're trying to accomplish, and historical data, or anecdotal data from a mentor, someone you respect, someone who has success using this strategy, then you should start to implement this strategy with real money, to learn about your emotional and psychological and your decision making, and you won't get that with paper money. You'll just loosely start strategy hopping and learning different strategies on paper, and all of a sudden you're a jack of all trades and a master of none, and you barely understand these 20 different strategies, but you've made a bunch of money on paper. But anyways, that's essentially my answer.
Great. Thanks once again for your clear and concise answers and knowledge that you're sharing with us here. Uh, most of the things you said, couldn't agree more. It all comes down to discipline, and I agree with you. We could easily get distracted from our methodology, and not be strict with our stop losses and our risk management. But it just goes to say, how you do something is how you do everything. And if you sloppily paper trade, then you're just gonna sloppily trade. So thank you.
Thank you, man. Appreciate the question. Great question.
Hey, great question, Alex, bro. Appreciate you, my guy. Appreciate you, man. Jake, do you have a question? And then that'll be followed with Sunny and then AB afterwards.
Yeah, I was gonna ask a similar question to the last fellow, Alex, or Sonny, yeah, Alex, who had spoken. But I mean, I've learned a ton from TSDR over the course of my about 1.5 to 2 years of actually trading. And the orb strategy that he taught is basically my go-to every single time. So I guess what my question would be: what did you do to determine more than one strategy that could be your quote unquote bread and butter, or something that is a reliable strategy? Because I've found that when I tend to fall back on one, it's that one strategy, and then if it doesn't work out, I'm usually not trading for that day, which don't get me wrong, is never usually a bad thing. You don't have to trade every day by any means, but um, I guess my question would be maybe a little nuanced. How did you find more than one strategy that's your go-to? And what were the tools outside of maybe back testing that you used to identify that strategy? Because I know back testing is something I try to do as best I can in my Excel journal, but I don't always journal the trades that I think about taking or the reasons I think about taking them. So I guess, how did you implement more than one trading strategy as something that you felt confident in utilizing on a daily or even just weekly or semi-regular basis?
For sure. Great question, man. Take a look at UPST 5-minute chart from yesterday. That's a beautiful looking opening range breakout. Anyways, because I've got a list of pretty much like all the setups I use, and
You've got like 200 of them too, so that's why I'm asking specifically, is because I know you juggle setups like you're a damn a carny. So it's just so impressive that I see you alternating between all these strategies and still managing to find success in almost all of them, if not all of them. So that's why I thought I'd ask.
So I do think as a trader you need multiple tools in your toolbox. However, I know a lot of traders who really only use in single setups. One of the most respected traders that I know, my good buddy Armand that we worked with at Buffalo Wild Wings. He essentially just only trades the opening range breakout or breakdown in the first hour and a half of the market, and he's very successful. Some days he doesn't take trades, some days he takes 3 or 4, some days he takes one. But he's in and out and done in the market by about 10:30 every morning. I'm Central Time, so this would be 11:30 Eastern Time, every single day. Very successful with it, and he's well aware of his personality, that he likes to be very specified and likes to focus on one task, one discipline, and that's just kind of person he is. Whereas me, I'm you've heard me talk, you can probably hear it in my voice that I'm jumpy, fidgety, excited, very quick talker, this and that, and I need a lot of setups. Whereas, and I can't sit at the computer, and if the 15 stocks that I'm watching don't give me that specific one setup, then I'm just done for the day. That's just not the the person I am, the kind of trader I am. I need a lot of tools in my toolbox. Now, a specific question about how do I juggle all of those. Essentially, at times in the market, it kind of determines what setups are working more often than others at a specific time, and you become aware of that that market structure by journaling and reviewing your trades. Hey man, like over the past 2 weeks, I took 12 VWAP sizzles over the past 12 weeks, or over the past couple weeks, and I took 0 opening range breakouts, and I took very few 20 EMA pullbacks. So what does that tell you? That tells you that we're in the morning we're probably experiencing some chop and consolidation and maybe even a little bit of drawdown, but we're getting bought up intraday. That range is staying choppy but tight in the morning, and we're eventually seeing buyers come in midday towards the end of the day, and we're starting to get bigger moves towards the end of the day, and then at times maybe VWAP bounces are you're seeing yourself take 15 trades over the past couple weeks, are working. That means we're getting a strong morning push, and early, and then at some point in the afternoon we're getting a significant pullback into the VWAP, and that level is holding. The algos are getting turned on, buyers are coming in at that VWAP, and we're starting to recover later in the day and get good later in the day moves. Or let's going back on those VWAP bounces, if you're getting a significant push in the morning, you're probably also taking a lot of opening range breakouts in the first 10, 15, 20 minutes of the morning, on that initial push. So I think both of those kind of correlate, if we're getting that pullback after the morning push. So in short, it
It sounds
the,
like identifying volume and market rotation a little bit, but
yeah, so your setups allow you to identify kind of the personality of the market at that time, what setups are working at certain times and when what aren't, because for weeks open range breakouts didn't work, and for weeks failed opening range breakouts were like, was a trade that I took like the most. We'd open ORB to the downside, and I'd immediately buy that up essentially. So it's just identifying what the market is doing and having tools for a variety of different market personalities and market structures is crucial to trade as actively as I do every single day, 5, 6, 7 trades a day. Really trying to make money at every turn of the market. Essentially, I want to be equipped with as many tools as possible that I know to work, and I don't want to be specified and handcuffed by one setup. based on a variety of things, my personality, my trading style, and just the way I like to trade. So I've got about 14, 16 different setups that I use pretty much every week or every month. I use a variety of them. You guys just heard a few of them.
I know I've heard a lot of them. I just wanted to make sure that I could help myself identify when and how to use some more. Definitely will still be keeping a close eye on all the things you're doing as well as I can. But thank you so much for answering that, and thank you, Adex and Trooper. I just gave you both a follow because I was unfamiliar with the accounts. But thank you so much for having such a good speaker on here to educate us on a nice Sunday afternoon. I hope you guys are all having a great weekend.
Thanks, Jake. Hey, miss you, buddy. Keep it up, man.
Thank you.
Yeah.
Thank you. Wonderful question as well, man. Thank you. Appreciate it.
Yeah. Thanks, guys.
Sonny, if you have a question, and then AB will take you afterwards as well.
Hey guys, how's it going?
Doing well. Doing well. How about yourself?
Doing well, thanks. Yeah, I think I spoke with TSDR a little bit on Friday. I joined your, I think you got his spaces going. And I did give the host and co-host Alex and Trooper follows as well. Let's keep this going because that's all I'm concerned about is trading and how to capitalize on whatever type of market we have, especially right now with all these fluctuations. And I agree with everything TSDR said. Back test I think is number one. Like every day, even like tonight when I get home, what strategies worked, on the S&P or any stocks, or whatnot. But I was supposed to say, I just completely agree with everything you're saying. The moving averages, what the discipline, but I think that if I had to ask a question, which is something that that's my biggest issue at times, is when do you know it's a chop day and not to trade? That some days your signals don't work out, and it's better to just kind of take one or two, maybe not even take any trades that day because that you're in a tight range day. So like, what do you think is your advice on avoiding trying to go for a home run when it's really just a day to slow down?
Yeah, great question. You really aren't able to identify chop, until I don't want to say a little bit later in today, but a little later into the open, and you have to split up the day into essentially three sessions, right? So you've got the opening session, you've got the midday, lunch, afternoon session, and then you've got the closing session, right? And maybe in the morning we get the morning session is filled with chop, and then lately, at least last week up until Friday, we've kind of had a decent amount of chop in the morning, maybe a little bit uptrend, on a few days, but then some point in the afternoon, we've taken a little bit of a drawdown, and then eventually midday during lunchtime we've gotten bought up so crazy and just began to trend for the rest of the afternoon. So I think it is important to break the day down into three sessions. Just because we're choppy in the morning doesn't mean we're necessarily going to be choppy in the afternoon and closing session. But if we are choppy in the morning, it is important to recognize that and identify it. Ways that you identify it, at least for me, and this probably isn't the best answer or most encouraging answer for most people. But like I said, I've got pretty decent discipline of keeping losers very small and very quick. Is I'll still take trades and throw out feelers in that chop, and maybe I get two losers in that time. I'm really good at keeping them small, but then if I begin to see it continue to last and I'm still taking trades, if I take a couple losers in the morning chop, I'm sitting back and waiting for a really solid setup to come, because I don't want to take three losers in a row to start the day. Right, so I've essentially got that rule, is that three losing trades in a row, you really have to step back and do some deep reflection. So before I hit that three losing trades in a row, I make sure, damn sure, that third trade is worth taking. Right, whether it be the third trade of the day or third trade of the week. So that is really important. That's something you can implement into your system. If you have two losing trades in a row, make sure that third trade that you eventually take is damn worth taking. And then from there, and also if it is choppy, maybe it's choppy, or maybe you're just you're just not seeing something in the market that day that the market's trying to tell you, and you need to sit back and listen a little bit closer, because there was a few days, a couple weeks ago, or early in the morning on either Wednesday or Thursday, where I had one winning trade early in the morning, then I took two losses immediately after, and I stepped back and I was like, something's going on here. I'm not seeing something right. And instead of saying, sure, the market's just choppy, turn back on myself and say that I'm not seeing something or hearing something that the market's trying to tell me. So a little bit of that. How do I identify a trend, or how to identify chop? Again, use those five levels of confluence that I referred to earlier, of price, 9 EMA, 20 EMA, VWAP, and then yesterday's close. If we're choppy, you're going to see the 9 EMA and 20 EMA just kind of shoot back and forth, back and forth, back and forth, right? Continuing to cross over. And if we're in a trend day, you're going to see that price, 9 EMA, 20 EMA, VWAP, uh, yesterday's close. Now at that point, it's often sometimes too late to hop on it, to hop on the trend, which is sometimes, for me, sometimes trend days are very difficult to trade, because they really only provide, sometimes one or two entries throughout the day to hop on the trend and ride it. That's why, in that SPY example that I was talking about earlier, as that 9 was crossing over that 20, we're also getting that bear flag right at that level. I was like, this could be the start of a trend, and I want to have that really picture perfect, pristine entry if it is the beginning of a trend, if it is the beginning of the trend, because it's starting to show all the signs, right? The 9 crossing over the 20, price is below that. 20 is below the VWAP. VWAP is below yesterday's close. So that's a way to hop on the trend early. Until then, you're essentially just taking feelers and whatnot, because if you don't have all those levels of confluence, the probability of the trade working out are just lower until the trend begins to set a little bit.
Thank you, my guys. That was wonderful. Thank you. Thank you. AB, if you want to ask a question as well.
I'd love to. Thank you for hosting. I really appreciate this. And TSDR, I just came across you about a week and a half ago, and I've been learning a lot. And so it's really nice. I've gone on your YouTube, and I've been able to listen to you on Spaces, so it's been pretty cool. I have three really simple questions. I'm a little bit newer relative to the group, so I hope you indulge me. But the first question is, what's the difference between SPY and trading SPX? Is it one slower or faster? Why do traders prefer one over the other?
SPX is for crackheads, man. SPX is probably the most volatile product in the market, and SPY is a little bit less volatile, but still volatile. SPX has expiries every single day: Monday, Tuesday, Wednesday, Thursday, Friday. SPY only has Monday, Wednesday, Friday. So if you're really looking for that crazy leverage and quick moves, you can get that every single day in SPX. SPX is trading the underlying product of the S&P, whereas in SPY is essentially a derivative of the S&P. It's just an ETF that represents the S&P. So that does that answer it at all?
Totally. That's what I was. That's why I stayed away from SPX, because it just looked too fast for me. But I was just curious, so I appreciate that. The second question that I have is, like the SPYs and such like that. I tend to see like maybe it's better to buy time, as a newer trader or whatever the case is. Does it, if I'm buying a Wednesday contract on a Monday, or a Friday contract on a Wednesday, or whatever the case is that slowing things down for me a little bit and keeping me like to keep up with everything, or does everything kind of just move the same?
No, it definitely does slow it down a little bit. Not as much as trading like next week's contract on an individual stock, because you're really only buying yourself 2 days, and sure, it does reflect a little bit, but not as much as like on a Tuesday trading the following Friday's expiry on like Nvidia, for example, on the previous Tuesday, right? That is that'll slow things down a lot more than trading SPY expiries that expire Friday on Wednesday. Those will still move significantly fast. And I just use option, and I traded shares, pretty much all the way through the early part of 2022 only. I was aware of options. I essentially only used them as hedges and as selling the premium to get executed really at prices, selling puts or selling calls against positions up until 2022, where I began to really dive into that, using the leverage of them, to trade.
Super appreciate it. And then the last question that I have basically is, we got a big lineup of earnings and events coming up this week. And I was just wondering how you're approaching it. And, I haven't traded, with this IV flush that people talk about. And I'm just kind of wondering how you approach, these type of weeks. How you prepare
Yeah. So specifically this week, I'm gonna take things a little bit easier than maybe some other people, because I don't. I think traders and participants in the market might need a little bit of time to process all the information that we're going to get. I do think we're going to get some significant moves, based off all the earnings we have, and all the economic data, the GDP, blah blah blah. So we've got a lot on our plates this week, and I don't really want to be a guesser at this time. This goes into my trading earnings strategy, where well, obviously I don't trade ahead of earnings or going into earnings. That's just not something I do. I don't think it's something anybody should do. But I will trade a lot of stuff the day after earnings. For example, Meta on Friday. It's not specifically an earnings play. Obviously Snap reported earnings, but Meta was trading in concert with Snap, right? So, if I didn't take this trade, but had I actually watched it on my screen happen. Had I wanted to take this trade, because I ended up taking, I was in a different trade at this time. I would have been watching Meta. Meta would have been a stock in play on Friday. It was a stock in play on Friday, and the only setup that we got was at 10:55 and 11 a.m. Eastern time, was this VWAP rejection on these candles. We got a trending stock to the downside, and we see price pop up to that VWAP and then reject. And then it starts to trend. We break lows, and then where do we, see that strong continuation? Is right at the 9 EMA. We get a nice bear flag at the 9 EMA at 11:25. I do trade a lot of things after earnings and their sympathies. If Nvidia report, or if Nvidia, what's something that reports this week? Visa, for example, reports this week. Let's say they shit the bed and they're down 20% this week. That'd be crazy if that happened. If it happened, everybody in here better follow me and say, "Hey, good call." I don't think that's going to happen, but so I'd say Visa shits the bed and is down 20%. I'm probably actually not going to trade Visa directly, but I'll be watching American Express, MasterCard, and a few others, because they're probably going to gap down, and move in sympathy to them, and they're probably they have the range possible that day to trade. Something like Amazon. I'll either trade that directly or trade Shopify or Wayfair or Etsy, in sympathy of those. Or I'll trade them directly. If we gap up or gap down, I'll look for continuation of that move. So if we gap up on Amazon after earnings, I'll be looking for, in the first 30 minutes to an hour, I'll be looking for an opening range breakout continuation. If we get that and I miss that, I'll look for a pullback to the 20 EMA to hold and take that trade. If we end up making a big move and just going straight up, kind of like Tesla did after its earnings report, then I begin to look for, a little bit of, again, that 20 EMA pullback. Let's actually look at Tesla quickly. That day of earnings. Yeah, so this thing, I wasn't able to trade this on Thursday because it didn't give me a setup at all. As we were pulling back, I was looking at this to pull back to the 20 EMA and hold at about 10:30, 10:45 ish, and we ended up bouncing slightly above that 20 EMA, so it just didn't give me a setup. Sure, it was up like 10%, but it didn't really provide me an entry. Maybe a little bit later in the day here at about 1 o'clock or 1:45 it gave an entry, but it just didn't provide it. So anyways, I'll look to trade stuff after their earnings. I'll be looking at a bunch of stuff this week after they report, looking for a continuation, looking for a variety of technical setups that I use every single day on after their earnings. And the reason why trading stocks after they report earnings is so valuable is because they're going to make significant moves. They're going to be in a period of expanding. I'm not going to get into ATR, but they're going to be in a period where they're going to really make those bigger moves. They're going to have that range that is needed to trade, and they're going to have significant liquidity that is needed to trade, and all those things come together after earnings, which I love.
Much appreciated. Thank you so much.
Great.
But I also had a pretty kick-ass week last week, and after I do that, instead of sometimes I do a little bit of a heat check, which I did a little bit this towards the end of the week, but then I revert into a little bit of a defensive mode, and I will and I think this week I'm gonna be a little bit more defensive versus aggressive. This week is kind of my very tentative strategy this week, unless we just get a massive dump. Then I'll flip and I'll be incredibly aggressive this week. If Apple just takes a crap on their earnings, or and Amazon takes a crap on their earnings, and we're just trending down 4, 5, 6% on the S&P, yeah, I'm going to be aggressive. But tentative game plan is that I'm going to be pretty defensive this week.
Thanks for that answer, my guy. Appreciate it. And man, TSDR, thank you for the time you've allowed for us, man. Like an hour and a half, dude. I expect nothing less from my guy. I appreciate you, man. Thank you, thank you, thank you. And that will be the conclusion of episode 9 of the Strat Talk. Thank you, TSDR. And thank you for everybody else who was able to participate and be in the audience. This was amazing. How can the audience members reach you? Or do you have any last words that you'd like to say? Tell the people what you have going on.
Reach out to me, man. Don't be shy. When I was first applying for jobs, I at restaurants looking for a serving job. I had no serving experience. I worked, in my uncle's restaurant, essentially just cleaning the toilets when I was 13, 14 years old, mowing the lawns, whatnot. And I was looking for a hosting and serving job eventually. Is I just hounded. I'd put in an application. I'd call them the next day. They say, "Oh yeah, we'll take a look at it." Well, then I'd call them back the next day. Say, "Hey, have you looked at that? Can I come in for an interview?" Back and forth, back and forth. Essentially that not taking no for an answer. And I encourage everyone I talk to, if I said something you like, if you want to reach out to me, is kind of implement that same kind of aggressiveness. Is use these people, and whether it be me or anyone else, is really be aggressive with getting your questions answered, and getting them to spend the time responding, because if they're good people, and here to help and here to do good, that they will respond, and I sure will. And more often than not, I'll probably give you my phone number and say, "Hey, just call me right now. We can chat and work some things out." But yeah, if I'm someone that you want to use as a resource, be aggressive with asking questions, and demanding me answer them, and give you the time of day. You really won't have to, because I will, but demand that of people.
That's great, my guy. Thank you. And thank you to my fellow co-hosts of the panel, Trooper, dude. Would you like to say anything to TSDR?
Just absolute masterclass today, man. Thank you. I really appreciate it. Like, I had to tell you if you could repeat something, because I'm literally sitting here taking notes, man. So thank you for your teachings, and you're doing great things, man. continue the YouTube videos, please. I'm loving those.
Yeah. Oh man, they take so much time. It takes so many
Yeah.
takes. It takes so many takes to record it. I'm so bad at talking to a computer. Hey, thank you guys. Thank you, Adex. Thank you, Trooper, man. You guys, I love listening to this. I love being a fly on the wall, watching your tweets, seeing everything you guys are pushing out and doing. Keep it up. You guys are doing awesome. Since Adex, since you and I both had 100 followers, man. This has been quite a journey, and I got a hell of a lot of respect for you. So keep it up, man.
And thank you, man. I have a whole lot of respect to you, my guy. Thank you. And thank you to everyone in the audience. Thank you to those that asked questions as well. We appreciate all of you for joining and listening to our 9th episode of the Strat Talk. And of course, thank you to the squad, to the AdexTrades team that is here as well. Of course, we will have this space recorded. For those of you that are interested in joining our Discord and learning about the Strat, feel free to click the link in our bio to join. Good luck this week to everyone, and have a great rest of your Sunday evening. Peace out, everybody.